Hello and welcome to the DecisionPoint trading room. As you can see, I'm not in my normal habitat. I am in a hotel room currently. So I'm going to be turning my video off after we do the welcome because I don't want anything to jump around and lose some of that bandwidth. And let's face it, this camera is terrible. So we welcome you, and I am here with Carl Swenlin, my father. I'm Erin Swenlin from DecisionPoint.com. We're going to look at the charts that we think you should be paying attention to going into this holiday trading week. And I'm just going to dive right in, Dad, and I think you should just take over. You have that excellent quote to share with everybody.
Yes, indeed. I get John Malden's free newsletter every week, Thoughts from the Front Line. And he did a discussion about the cryptos. And I pulled this out of the letter as a quote. I think that FTX has the potential to be the biggest financial debacle of our lives, bigger than Enron, bigger than Madoff. And why would that be? Because there are way more people involved with this crypto mess. And that is why it's likely to be worse than anything we've seen so far. So let me go do a new share. Okay, starting with the S&P 500, represented by SPY. Basically, the last, 7 days, including today, it's been in a cluster with a slight downward bias. We started out with a rising wedge formation starting back here, but then last week it broke out of that. It doesn't seem to be heading higher out of that breakout. So potential is it's still slightly wedged there. Potential is that it will drop down out of that wedge formation. Let's look at Bitcoin. We just started out with crypto. I should have gone right to that chart, but here we go. Bitcoin is definitely trading lower. We've got a reverse pennant formation here, and we could say that it's broken out of that formation, but basically, more important, we've got this line of support right here. Chances are it's going to continue lower. Okay, back to the S&P 500. Notice as of Friday, total volume on the S&P 500 really backed off quite a bit. It's actually Thursday and Friday here. This will update at the end of the day. It's not an intraday like SPY is. Okay, looking at the potential for things getting better. Right now, the Golden Cross Index, which is the percent of stocks with their 50 above the 200 EMA, is at 35%. Now, looking at the stocks above the 200, that is the hardest.
That takes forever.
Cross, is at 58%. So as the potential, if it's above it's 80% above their 50 and 58% above the 200. So at least we have a potential for this number to change from 34 to 58, roughly.
Mm-hmm.
Now looking at the Silver Cross Index, that's at 69%, and we need the price to be above the 50 and the 20. Right now, the hardest hurdle is the 50, and they're 80% above their 50, 84% above the 20. So this has a potential to go up to something like 80%. I'm not saying that's where it's going, but right now we don't have much of a downtrend out of this most recent top here. Looking at the 4, starting with the dollar. Dollar is rallying today, up almost a full percentage point, and it's reaching a point of resistance here. We have the rising bottoms line, which is below, which is now resistance, and we also have this horizontal resistance at this point. So that's something, that's a hurdle that has to go. So it's up almost 1%. Gold is down 0.7%. Now that's very encouraging. Normally you expect gold to be equal in opposite direction. So it's only down 0.7%.
Well, the support, what do you, I'm sorry, I hate to make you stop there, but what do you think about that support level holding? I mean, I know it's kind of gap support. There's a lot of stuff going on there, but that PMO is a little concerning.
The PMO is topping. So yeah, I am concerned that it's not going to hold. Basically, this gap here needs to be filled. And it could be that will turn out to be the level of support that it has to reach and won't go below. But, you know, with the PMO being above 1 and topping, it's that's not encouraging. The crude oil USO ETF, well, it was down before we started the show. It's I see it's up now, and perhaps has hit its bottom for this particular decline. PMO has topped, and it is at almost on the zero line at this point.
You know, I'm sorry, I keep stopping you. You know, we don't necessarily talk about the crude oil volatility index, something we just added, as well as the gold volatility index. But I'm noticing that huge spike on our reverse scale that is puncturing that bottom Bollinger Band. And typically that's a bullish sign.
Yes, the bottom Bollinger Band tends to be, let me get this up and annotate it here a little bit. We've got, this is in the way, so let's see. So it came down quite a bit. This tends to be support for the for USO. I mean, that the bottom Bollinger Band, and it's come quite a ways through that, but it's back up at the band. So possibly, yeah, that does speak for a good shot towards it moving higher from here. Let me see if I can get out of this. Okay. Treasury bonds, this is a 20-year Treasury bond ETF. It has broken out of this declining tops line and is being held at this line of resistance right here. That's where I've drawn that line through. That's the basis of that. And let's just let's look at a 1-year chart, which, okay, you can see that line here, but this is a much longer term declining tops line, and it's likely to run into trouble at that line or at this line of horizontal resistance. Okay, we've looked at, here's the Treasury, 10-year Treasury yield, and it's had a nice decline. We have a Adam and Eve double top, and we have, looks like it's found support here. It's been consolidating at this level. So I think with the potential of more interest rate increases, and we have been told that they're going to raise it at least 50. They could change their minds, but I think we should count on yields going higher very soon. Looking at the big tech stocks, Apple is down over 2% today, which is why the S&P is being stressed a little bit today because of the Apple primarily. Amazon down almost over 3%. And notice we have a total of almost 55% decline from the all-time high, and probably going to go lower. Google off over 1% today, and again, it's been from the all-time high, 45% down. Native platforms, hard to figure out what's going to go on with that. It tried to fill this gap and didn't quite make it. So it looks as if it's going to go lower, but the PMO is still rising. So still a chance that it will catch hold and move higher and fill that gap at least. Microsoft, the only one that's up today, I believe. But it's been down 40% from its all-time high.
Yeah, it doesn't look too bad, honestly.
Netflix, filling the gap right here. And what did I say? Let me just check it. As bad as it looks, it's up almost 90% from its low here. So that's encouraging for Netflix holders. NVIDIA also rounding off the low, but it's down nearly 70% from its all-time high. And the PMO, notice it is rolling over. So probably going to retrace somewhat here. And this has a pretty good range on this, from plus 10 to looks like about -7. That's a pretty wide range, but not uncommon for the high-tech stocks like this. And it's, rolling over. Finally, Tesla, not really a high-tech stock, but it broke down today big time. It's down 5%, over 5%. And I'll be redrawing that line later today, it looks like. One other thing I wanted to look at is the earnings chart. I looked at the most recent earnings spreadsheet from S&P, and these lines, these are the projected levels of, I should go back. The red dotted line is the overbought level. That's a PE of 20. Blue is a fair value of 15, and the green is an undervalued of 10. So all this is a projecting out to second quarter of next year, and these lines have all come down, and it looks as if they're going to continue to come down. So everything is below this high here. Yes, the market in the thumbnail here, it's still very overvalued. It's even over the 20 PE of 20 line here. So it's definitely still, this works against it. You can't really time your buys and sells on this chart, but it definitely tells you with a background what kind of fundamentals you've got working for you. Then I've forgotten something. I guess I can turn it over to you, Erin.
Yeah, I don't think we have. I'll let you kind of look at those symbol requests that are gathering. And
you know what? I did forget something.
Oh, okay. Well, there you go. Don't we all?
I had a chart up earlier that I did the bias. Now I want to do our two primary
Oh,
indicators.
yes.
The Swenlin trading oscillator for breadth and volume, and then the ITBM, yes, the breadth momentum and volume momentum charts for this intermediate term. The short term is we've got a strong negative divergence there. So based on that, I'm looking for prices to go lower. We've got an oversold ITBM and ITVM, and I'm looking for those. Based on that, that's an intermediate term indicator, and we should go lower still. We may go down as far to challenge this this low here from October. So that's right now. This is not looking very good. And notice I say overbought compared to this one. No, it's not. So we still have maybe the potential if this rally continues to get up in a very, very overbought level. But here's more typical of the levels that we can see on these, and we're already at those levels. So not very, very.
Yeah, not very encouraging. But I think there is kind of a flip side to look at, and I know you'll totally disagree with this, but I have to throw my opinion out there. But one of the things I'm thinking about, and I'm not a perma bull or anything like that, but I see that, we had this kind of consolidation period, and maybe for the optimist or the Pollyanna and all of us, yes, negative divergences, yes, these indicators turning down, but maybe it's just been a really nice decompression period. Maybe this is a flag. Maybe we could see some higher prices after we kind of shake out and digest that rally that we had out of the October low. I think I'm being a bit too optimistic, but I still think there's that possible, a possible resolution.
Well,
not as
something
likely.
I left out is, yes, we do have Santa Claus rally due around this time. So that is something that could pull us out if we get one. Yeah.
Let's hope. Like I said, I think this week will be really interesting with the holiday trading, just to see if it can hold up at this 390 level. With holiday trading, there's not a lot of volatility. So it is, I think, another chance for these indicators to keep going down without having to experience like a giant decline.
Yeah, and I brought the questions up. One of our viewers wants to know how far back the Bitcoin support at the bottom goes. Okay, this is the longer term chart that we provide, and notice we've got 15,000 is where I've got a line drawn. It's not a lot of defined support back here. The best support we have is right at this bottom line, and that's about 12,000 for Bitcoin. So that's after that we're going much lower, and let's see, we could go out. We've got let's go out, say 5 years and see what we get. Okay, there's 5,000, and then here this is about 4,000. That's a very long-term support. I don't think any one of those lines is going to make anybody happy.
No. I think a lot of people are unhappy with Bitcoin right now.
Yeah, indeed, no doubt about it.
As an aside, my husband has a friend, and his friend's son decided that, getting involved in Bitcoin, mining Bitcoin, all of that would be a great idea, pretty much right at the top for Bitcoin. We, the whole time while it was going up, oh yeah, Bitcoin and my son, and then it's been crickets for like a year. So, and I've told him not to ask him about it because I think it would be a bad question. I don't think it's been going so well. All right, let me get my screen up here. And again, for those of you joining late, I am in a hotel room currently, so my screen, my beautiful face is not showing because I need to save that bandwidth. And so far, so good. Knock on wood, which I have right next to me. Okay. All right, so here is a candle glance of all of these sectors here. I like to put them all on the same page so we can just get a good sense of what's going on in the market in general. And, the first thing I notice is there are a lot of PMOs that are beginning to decelerate and turn over a bit. And energy would, of course, be the worst one based on momentum because we have that negative crossover coming in. These are turning over on materials. We're seeing it turn over on industrials and on real estate and technology. Let me get my Zoom thing out of the way here so I can actually see the utilities chart. Utilities still looking okay. I don't see a whole lot of deceleration there. And really my sector that I'm going into the week really paying attention to right now is healthcare. Financials also look a little bit, there's some possibility there. But let me show you these two charts in particular, just because those PMOs, it's hard to tell on the candle glance, but the PMOs are starting to turn back up. You're starting to see some acceleration coming in. Let me add the thumbnail here so you can see it better. So you can see the PMO had flattened out. This, granted, the acceleration here is barely visible. But the point is, unlike energy, unlike materials, some of the others that were really showing leadership early on and are starting to fade, financials are starting to look okay. This looks like pretty much a textbook kind of flag on a flagpole here. And you see the declining trend. We really want to see price pop up above that. But I think that it's looking, it has its potential here for financials. Notice also that relative strength is beginning to turn back up. So that's a big positive as well. Stochastics, though, not above 80. This brings us to the healthcare chart because it's got a lot going for it. So you can see it actually is one of the few sectors that are up on the day, still having some trouble with overhead resistance. We're not getting that, but notice the PMO, definitely a different look from the other sectors. We have a bottom above the signal line. Now, I will say that it is very overbought. It's definitely an overbought territory. But I think that, if we can get above this level of overhead resistance, that this might be a good place to go. I also was told by somebody who's retired from the big money manager business, and he said that in his experience, a lot of the big money managers, when you get down to the end of the year, they have to have their money somewhere always. And that a lot of them do tend to move over to that healthcare space, pharmaceuticals in particular. So we will be looking at that industry group chart.
Erin?
Yes.
The PMO in April, the beginning of April, that you have a bottom above the signal line there, looks like. And
true that.
So it has, it's right now it's really overbought, and you probably have a last gas move before it tops out. Finally, the price.
Yeah, I can see that for sure. But again, if we're going to sit and have a discussion like we do on Tuesdays in particular, I still think participation looks okay. It's holding up from what it was back, during the rally. And I think in April, you could see the participation really starting to peter out. So I don't think we're looking at, a giant rally or anything coming here, but I do see a breakout. I see a move that will possibly test those highs. But isn't that what makes this show interesting, is when we have different opinions? So I know you always think you're right because you're my dad, but, we'll see how it goes. All right. But no, great point on that for sure. Let's see.
Things get better and better until they're as good as they're going to get. And then they get worse and worse till they're as bad as they're going to get. And so sometimes they can hang in there at the best for a while, or vice versa at the worst for a while. But generally speaking, once they've reached that, it's like the pendulum swing. Once they've reached one extreme or another, start looking for a turnaround.
Yes. Well, and as we saw on that chart, on the candle glance, which I think I can pull right back up here. What we saw on that candle glance, we have a lot of these sectors that are already peaking out. I mean, comm services really made a nice rally. It's starting to, move down. We are holding support here. So again, I think there's a little bit of hope out there. But look at discretionary, PMO turning down. Staples still look pretty good, and I didn't present that sector, so I'll take a look at that sector.
Wait a minute. Look at, there are so many of the PMOs that are actually overbought.
Yes.
You see 1, 2, 3, 4, 5, 6 right now that are overbought.
More than half. So it's, I think that, we do talk about rotation in the market. And, again, some of these, money managers have to have their money somewhere at some time. So generally, you are going to find a sector that's going to tend to do better than the others. I mean, energy, I think, has been the one to hold things up for a really long time. It just started to stumble back here, back in the end of the summer. Had a great rally, of course, but definitely looking very choppy.
Energy is looking really bad, isn't it? Yeah.
Yeah, there's just nothing good to say.
There's going to be so much demand in that area.
I know.
The winter. So I don't get it.
I know. So we'll see. I mean, maybe this is a chart. Yes. Well, and what I've noticed, especially during this period, is the fact that, energy was doing pretty well, but oil during that time, during the mid-October to the beginning of November, oil was not doing well. I mean, granted, energy is made up of more than oil companies, but let's face it, it's made up mostly of, crude related type of industries and stocks. And yet energy was still going up. So that seemed a little weird to me. And, seeing the double top now, I think the energy sector is just going to be a really rough place to be a part of.
Yeah.
But I did say I'd look at the consumer staples. And then I had one more point on healthcare I was going to point out, but I love the discussion. This is great. So on staples, we actually see price breaking out here from an intermediate term declining trend, having a great day today. So this might also be a defensive sector to consider moving forward into the end of the year. You can see a really nice rally. It looks like money is starting to rotate more towards staples. But we do still have that same problem, don't we? An overbought PMO. It is moving upward. It's not quite accelerating, if you will. But look at the silver cross. Very interesting. Getting that little bottom above the signal line. It too, though, is very overbought. So we have to keep that in mind. And the participation, even better than healthcare. So honestly, now that I'm looking at this chart, maybe the staples area looks a little bit more healthy than the healthcare area. Look at the relative strength moving higher. Stochastics have been above 80 almost all month, and that indicates internal strength. So maybe this is an area that we're seeing some of that rotation move into. I didn't even notice this really nice breakout from the declining tops trend line. So I don't know, this one looks a lot healthier than healthcare. No pun intended.
Yeah.
Okay. And here's healthcare, because I did have one more point to make on it. And that is, if you go down here, stochastics did just get above 80. But again, looking at this compared to consumer staples, certainly at least the stochastics were elevated above 80 for a lot longer than they were for healthcare. So Relative strength also improving, but, so if it were a this or that, honestly, I have to say I'd go back over to consumer staples. I should have looked at that chart more closely. All right, and then working down here, 9:30, we're good. All right, so let's look at a few of the industry groups. I did want to concentrate on pharma because I did like that particular group. And then we'll dive in a little bit into consumer staples and see what else is over there. So let's go to healthcare first. And as I said, the pharmaceuticals were the one that I was paying attention to. Look at the pharma chart. Now, this is what I'm hoping healthcare as a sector is going to do. We have a nice little breakout from consolidation zone. And, that's kind of what we're looking at on the XLV chart. So this is what I really want to see. We got the breakout. We've got a PMO bottom above the signal line. We have stochastics getting above 80. And look at the relative strength. I mean, this group is doing quite well. I have to say that having gone through that group, there are two charts that I'm going to show you from the pharma group that I like. But let's go back up to staples now that I've rediscovered it. All right, so personal products looking pretty good, moving up. Not a good day for it, but you can see stochastics are doing well. PMO's still shooting upward and not really at all overbought, I would say.
Yeah, I would say it's based on the range of the year. So it's getting up there.
Yes. But, typically if we see those minus readings way down there, I usually expect to see it higher, but it is definitely near-term overbought for sure. All right, brewers, stochastics above 80, PMO moving higher. Don't have the breakout like we did on the personal products space. Food retailers and wholesalers moving upward, nice rising trend. PMO looks a little suspect if my eyes are correct here. It looks like we're getting just a tiny bit of deceleration on the PMO, so not really as looking quite as good. Nice breakout here on food products, and look at that PMO bottom above the signal line. Certainly looking very encouraging. This breakout, though, we really want to see it get above this top back here in August. I think I would confirm this breakout on possible flag formation. So not bad on food products. Non-durable household, stochastics above 80, price now above the 200-day EMA, and a PMO that's just been shooting skyward ever since the October low. It is getting ready to hit overhead resistance here, so we do want to pay attention to that, but it does look like it can eke out just a little bit more upside. Drug retailers also looking pretty good, but still struggling with overhead resistance. Looks a lot like the XLV chart. We have the PMO bottom above the signal line, but this one is clearly overbought. I mean, when you've got the low end of the range at -2, and you can see back here, typically the top end of the PMO range is at +2, and we're at a reading of 3.5. So I'd be a little bit careful there in the drug retailer space. It's definitely due for a correction. Soft drinks, really nice breakout. I imagine that Coke is the reason for that. So let's try and look at Coke after I finish with these last two. And stochastics above 80. I mean, everything looking pretty good for that group, but I bet it's just due to a couple of big names there. Tobacco still in a nice rising trend, hasn't gotten above the 200-day EMA. I think we'll know more if we get the breakout above that 200-day EMA. I mean, it's broken from a declining trend. So, I mean, there's that. And maybe in the longer term, we're looking at a double bottom for tobacco. Stochastics above 80. Distillers and vintners starting to break out. And you can see that the PMO got a little bit accelerated here on this breakout. So, we could see some more upside here for the distillers and vintners. Stochastics just getting back above 80, which tells us there's some internal strength. But Dad, as you've been pointing out, we do have some pretty overbought PMOs going on right now in a lot of these industry groups that we don't want to see. All right, so I said we would dive in and look at Coke, and then I have really quickly to at least one other symbol I wanted to look at. I did for your daily 5. Yeah, so Coke having a pretty decent day. Maybe there are different ones in that group that are doing better. So I'm curious now. I want to see.
Erin,
Mm-hmm.
I have a question. Do you know if there are ETFs for each sector's industrial groups?
Yeah, unfortunately, no. We don't have ETFs for every group. So you are kind of bounded by either doing what I'm going to show you how to do, or you're going to want to go, toward those sectors. But a lot of these, unfortunately, don't have ETFs, which blows my mind because, we have ETFs that are, the inverse of Apple. I mean, we're going into single stock ETFs now. I mean, come on, we need to get all these industry groups, but no, they are not all there. If you start typing in the name of the group in this area up here, then you'll get a list and you might be able to find something similar. Yeah, the other way you can do it.
The best thing you can do is, do a search on the internet to see, for specific ones. The S&P has a lot of ETFs that go beyond the 11 major sectors that we track.
Yes. And I know we put a lot of those in our ETF tracker. So if you're interested in the ETFs that we do cover, just send me an email, support@decisionpoint.com, and I can get you our ETF tracker. It's a pretty robust list, but definitely doesn't include every single industry group, mainly just the major ones. So soft drinks, this is the way, again, you can kind of dig in a little bit. And you have to think about it too. When they put together ETFs, they tend to be capitalized. And so you're going to see, pretty much the big large caps are, if you had an ETF and you looked at their top 10 holdings, for any ETF you're getting ready to buy, you should do that. And when you look at those top 10, you better like those top 10 stocks. Because, just like if you bought the energy sector, you better like Chevron, you better like ExxonMobil, because they pretty much are the sector, when you put those all together. So you have to think about that too. But here's a kind of a little bit of a hack. So you've got soft drinks. You can click here on StockCharts from that industry group summary. And it's going to bring up all the stocks that they have listed under soft drinks. And at this point, you can organize by scooter, and now that's going to show you the ones that have the strongest trend and condition based on the StockCharts technical rank calculation, which you can look up on the chart school and learn more about. The top 2 large caps, I'm just going to hover here. So you can see that FMX, Fomento Económico Mexicano, I got to get my Spanish brush up on that. That one's obviously having a really great move to the upside, and nice rally. Here's Coca-Cola. That particular Coca-Cola from FEMSA, which is probably also related to Mexico, I'm guessing. I don't know. Somebody can help me out with that one. Really overbought though, PMO here. Stochastic still looking good, a lot of internal strength. But notice that it's not performing quite so well against the group. So that would make me want to look somewhere else. These are really small cap. This one is a very small cap stock, so I probably would stay away from that. Celsius Holdings looking pretty good, pulling back right now. But this is a way to go in. And as I said, when you get into an ETF, they usually have those top couple of holdings. And really, if you go in here, you're probably going to be able to find what would be those holdings if there isn't an ETF. Monster Beverage breaking out right now, so that also looks pretty good. And then I'm going to show you one chart from the pharmaceutical group that I presented on your Daily 5 this morning, and that is Merck. I really like the move it's making right now, nice breakout move. been got a follow through, Jay, with that third really strong rally. And we're continuing the breakout. PMO is overbought, so I know this wouldn't be a stock that you would be particularly interested in, Dad, but we do have the PMO buy signal, stochastics above 80, and this is really what sold me on this one if you're going pharma, and that is seeing the relative strength rising for the group, for Merck against the SPY, and for Merck against its group. So we know you have more of a leadership kind of stock here, but we do need to be careful because, I mean, let's face it, it's pretty overbought. Looking at the weekly chart, looking pretty good, but it is making new all-time highs, not just 52-week highs. And that weekly PMO, although it's configured very positively, it is on the overbought side. So we have to consider that as well. But not a bad weekly chart, really. All right, let's get into those simple requests. We have about a little more than 15 minutes. So I'm going to jet through as many as possible because I'm guessing we have quite a few, Dad.
Right. And before we move on, I just wanted to mention that the ETFs, the components of those ETFs are given a certain, they're sort of weighted by capitalization, but they back off. They don't do it full bore. For example, if any ETF that Apple is in for just a sector type of thing, you might as well just buy Apple and ignore everything else because it would be ridiculous. But I don't know exactly what the formula is, but yes, they do weight them, but they don't give them the full capital weighting like they are in the S&P 500, for example. Okay.
Yeah.
ENLC.
Okay, ENLC, but I just wanted to show you, if you go to the simple summary on StockCharts, so you click this simple summary and put in the ETF, it's going to come up with all the information. But here is the place you can go. It tells you about the profile and you can click on it and it's going to bring you to the website for that ETF that you're looking at. And then you can go in and look at the holdings so that you know what the top 10 stocks are that they hold. So for example, if we look at this, you can see that the top holdings are just as we were talking about for XLK, Apple, Microsoft, NVIDIA. Makes a lot of sense, but you can see the weighting that they put on it. So if you're going to buy XLK, you better like Apple and Microsoft. I mean, it's just as simple as that. All right, so let's go ahead and get to ENLC. All right, definitely not a good day. Let's get back to using the sharp chart here. All right, this doesn't look too good to me. If I owned it, I don't think I would be holding it. I would want my, I would want my stop right about here at that top right there. So here's where I would want to consider putting a stop if I had it, because this really looks very, very toppy. RSI, look at it just falling down. You've got the PMO, not quite on a sell signal, but very overbought, looking like it's going to give us a sell signal. Stochastics have turned down. The group itself not doing well. And, you know, half of a stock's movement is going to be attributed to its sector and its industry group. So you really want to be in an industry group that is showing some strength against the S&P, and we don't see that right here. This looks really toppy. I'd be very careful and consider a stop. Let's see. I want to get my inspect tool. That'll help me give you a percentage of what that would be. If you go to that top, that's about 4.25. If you want to go just below that top, about 5% would be a possible stop level.
Okay, ET.
ET, phone home. Okay, energy transfer. As I've said, you know, energy, and Carl agrees, this is really not the best area to be involved in currently. And I think this chart is a great example. Yeah, this looks very flag-like, And we are at this support level, but the PMO is really not telling me that things are getting better. And let's put that Zoom thumbnail on just so we can see better. Oh, I can just do it this way. Yeah, I mean, that's a really sickly looking PMO. Yeah, stochastics are turning up. That usually is a great indicator to look to first. It's very sensitive, but a rise in stochastics when they're that low on it on the scale, you can see we saw it back here, doesn't necessarily lead to brilliant things. You really want to see that PMO confirming. Currently, it's not confirming the stochastics moving up. I mean, it just looks pretty bad. It's a leader in its group, so you picked a good stock for the pipelines group. But as you can see, that relative strength falling off for pipelines.
Got a nice yield there, over 7%.
Ah, good catch there. So, I mean, maybe you would hang out a little bit longer just so you can take
where in on it. And it's something to keep in mind when it gets lower, if it gets lower.
Yes.
Okay.
Put that on the watch list.
KMB. I had a lot of pipelines on my watch list.
Okay. Kimberly-Clark, consumer staples, which we just looked at, looking great. PMO on the overbought side. RSI certainly is overbought. We are about how far from overhead resistance? We're only about 3% away from overhead resistance. So your upside potential is getting a little bit, is shrinking. I mean, certainly it could get past that level. I'm not saying it will stop there, but what I look at is where is the next place where it potentially could stop. So then you end up with more upside potential, not a target necessarily. So upside potential here is about 3%. It could certainly do better than that. And the PMO is looking great. Not quite overbought. Looks like it's gotten a little bit higher than the reading we have now, but certainly something to keep an eye on. Stochastics look great. Relative strength is doing what you want to see it do. I like this. I would just say that upside potential is only about 3%. And if I were considering a stop, I keep pointing at my screen like you can see it. I would be looking right back here toward. Oh, I'm sorry. I couldn't hear you.
Weekly?
Yes, we'll look at the weekly. So the stop would be about 4%. Upside potential 3%. So that gets into that gray area if you really want to hold it for much longer. All righty, the weekly chart. There we go. Oh, weekly chart looks pretty good, but again, it's that upside potential question, right? I mean, it's in a trading range. The trading range got a bit wider. But if we're talking, back here, the trading range, again, it still gives you that 3%. Maybe if it gets up here, another 6.5%, 7%. So I don't know about an entry now. It might be a little late on it, but certainly if you have it, it looks like a hold to me. I just would need a breakout here to want to get in, even though that weekly chart looks pretty good. What are your thoughts?
I'm thinking something I can make a case for around the top. So, that I'd be watching out as it gets up to the resistance area.
It's more easily seen on a monthly chart, but there it is.
Yeah.
Monthly PMO turning up, but again, trading range and near the top of that range, that is not a place I like to enter.
Okay, Philip Morris.
All right.
MO.
MO. No, okay. MO. You're thinking of Altria, which makes no sense to have MO as there.
I didn't realize that. That's okay.
Yeah, like I said, I've started to look at so many symbols. I'm starting to learn them all. It's really crazy.
Altria used to be Philip Morris.
Oh, really?
Yes.
Now, see, I did not know that. They must have spun off.
I'm pretty sure that's the case.
It must have been a spinoff. That's interesting. Okay, trading range again. In this case, we're kind of near the low of the trading range. I need to get that thumbnail on here.
Head and shoulders.
Yeah, I definitely see a head and shoulders here. Neckline, kind of a rising neckline. So, we've already broken down and confirmed that pattern. Height of the pattern would tell us to expect a decline down here, right to support. So, on the bright side, we are starting to see a little bit of a turn here on support. PMO trying to turn over. RSI not quite positive, but getting there. Stochastics turning up. This is the only thing that would kind of make me say, besides that head and shoulders, would be that it's not a great performer against the tobacco group. But, honestly, it doesn't look that bad. I could see an entry here, but now I'm curious what that Philip Morris chart looks like. What is its now? See, a lot different on relative strength against the group. So, I think this one has a little bit better potential just because it's already showing that strength. It's already performing well against its group. Upside potential, about 4.25%, and your stop level would be about 4.25%. So 1-to-1 risk reward, something to consider there. We didn't do the risk reward on Altria, so let's do that one. All right, upside potential is about here, 5.8%. Your stop level is going to be 3.4%. So a little bit better risk reward here, but I think that the picture looks a bit more bearish on this one. But, I could see, I could see an entry here, but just keep that really tight stop, because if it fails to rally like it should to the top of this trading range, you'll be left holding that bag, and it's not going to be a good one.
Okay, IBKR.
All right, bounce off the 50-day EMA, but I would be really worried about this being a pennant on a flagpole, and that is a reverse flag. And the expectation is if it does not hold this 50-day EMA, that you're going to get a decline the size of that flagpole, and that would put you down pretty much into this support area between this August top and the September low. That potential would bring you down. Wow, that's about a 7. Even down here, looking at 10, over 10% decline, 11% decline. So that's a lot of downside potential there that worries me. And then upside potential about 9%. But looking at the PMO, looking at, let's see, the RSI, look at it's negative, kind of turning down. Even stochastics are sort of acting a little bit twitchy. Relative strength, not great. The group is starting to look better, which we said financials were looking better, but this one just, I'm not a fan of this one.
Okay, Ralph wants to know if WU is a buy.
All right.
PMO and RSI and stochastics look pretty good.
All right. Yep, RSI looks good. He's right. This is a bit of a problem, Ralph, though. The industry group is suffering a bit. I did like software a lot going into last week, and it ended up just doing this consolidation thing. But it could be the flag, right, on a flagpole. There's just a lot of overhead resistance. Stochastics getting above 80. This is certainly what I would call diamond in the rough material for my diamonds report. But honestly, Ralph, I really would want to see a breakout above this area of overhead resistance. It just looks a little bit, I love the flag. I love the support holding. But you know me, Ralph, and I know you, I tend to be a little bit more risk averse. I think that you've got a pretty good stock here, but I think that the risk is a little higher than I would want to get involved with, but certainly a good pick, I'd say overall.
HIMX.
That one I don't know.
Potential long.
Potential long. Ooh, potentially going to move a lot lower. No offense. RSI is positive, but boy, what a top that looks like on the 200-day EMA. PMO is starting to decelerate. Stochastics are starting to fall, and relative strength is starting to peter out. So I don't think I would be looking at this as a long. I think you could put it on a watch list, to be honest, because you do have sort of a cup handle look here. But I bet you're going to watch it move lower rather than higher if you put it on that watch list. But that would be a good way to see, if these indicators are actually telling us the story we want to hear, or I don't know. It'd be interesting to watch to see what happens from here with that possible flag. But again, I think you're going to see it moving lower rather than higher.
SCHW.
All right.
No, S like in Sam.
Yeah. Charles Schwab. So this is a financial, and like I said, that group's starting to look good. PMO looks like that is bottoming above the signal line. RSI is positive. Stochastics rising. They turned up in positive territory. And look at relative strength. So this is definitely more the kind of stock that I would be looking at for a diamond in the rough. Break from this short-term declining trend, gap up. Today is a follow-through third rally day. I think this looks good. Again, my risk, I'm a little bit risk aversive. I've been more of an intermediate term trader, so I need a lot of confirmation. I would really like to see this one get above that area of overhead resistance. And that would mean I would probably miss out on about 1.5% of the rally if I waited for that confirmation. For the risk, I would definitely be wanting that confirmation. Stop level has got to be at least 5.5% on it. So I need confirmation, but I think you're onto something here. I think it looks pretty good.
Okay. FLNG, and we have a little more than a minute.
Okay, I'm going to talk fast. This looks like an ascending triangle to me, flat tops, rising bottoms. That is a bullish formation. PMO is bottoming above the signal line. Now, when we talk about this stuff, it's usually short term, okay? When we talk about right now, because we're in a bear market, so think short term no matter what you do. I like the look, and we're going to go back to the conversation about seeing some confirmation that this is truly an ascending triangle. So I need the breakout here before I would want to get involved. That is a different story on this stock. That would mean I'd miss out on about, a little over a 5% gain. So if you've got the risk, you have a risk appetite, I would say you're going to need a stop. Let's go right about there at that top, at least 6.5 to 7%. And your upside potential is pretty limited. If it hits that resistance, it turns back down. That's only 4.6, 4.7%. So go in eyes wide open, but I have to say the chart looks pretty good. Boom, did it. Okay. That's all we have. That's all we have for you today. I will be back home next week, and you can see my smiling face then. And with that, we will say good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.